How's everybody doing? I'm a little sick. My throat hurts a little bit, and I didn't sleep much last night or the night before, thanks to ADTH. So we'll see how much I push through this. I thought it was pretty important that I got on here because both ADTH and TripAdvisor are very timely and very interesting, and I want to talk about them. So let's start with the man of the hour, ADTH. We got ourselves a topping bid, baby. Now, only one bidder came in. Would have been better if there was at least two. But all it takes is two to tango. And we now have two different people that we know are interested in buying the company. What we have to ascertain now is the likelihood of three different things happening, okay? And I want to go through it on this YouTube. The first question you have to ask yourself is whether or not the $3.35 bid will turn into a definitive bid, because it says it's still subject to due diligence. Okay. The second question you have to ask yourself is whether Cadent will exercise its right to match the $3.35 bid. And the third question you have to ask yourself is, will the new bidder then up their bid and you have a bidding war? Okay, so why don't we start with the first one? What are the odds the $3.35 bid becomes definitive? This is pure speculation, right? Because this kind of situation doesn't happen very often. But I would put it between 80 and 90%, probably closer to 90%, that they don't find something in due diligence in the next few days to pull their $3.35 bid. Now, mind you, it's very likely that this bidder is not sponsor A or sponsor B, party A or party B during the process for two different reasons. One, they didn't mention, I think they would have mentioned it was party A or party B. That's the first reason. The second reason is both party A and party B wanted to offer stock mostly, not cash. And this bidder is well capitalized enough to pay with all cash, which of course is very positive for a bidding war. So I would put it probably close to 90%, 85%, 90%, okay? If the $3.35 fails, this goes back to $3.16 to $3.17. Okay, that's about a 1.5% gross spread for a 45 to 60 day close. Okay, so let's do this together while we're here, while we're doing this together. So in scenario one, where the bidder walks and we go back to 317, I'm going to go with, just to be conservative, let's go with a 15% chance that happens. So there's a 15% chance that stock is $3, and we'll be conservative and we'll say $3.16. It's probably more likely 317. Okay. Then what is the odds that Cadent wants to match at 335? This is where it gets hairy. Okay. Cadent has been in the run for this since, I guess, October, and they clearly were not happy with the final bump from 310 to 321. In fact, they were so dissatisfied with it that they made the sponsor, the major shareholder, give up $3.5 million worth of stock to get to that point. So the actual price that Cadent is paying is more like 317, not 321, because they are not paying 321 for all the stock. The 40% holder had to give up $33.5 million worth. We have to ask ourselves whether or not Cadent, which is a $10 billion private equity firm, they paid $600 million for the vehicle that is going to be merged with ADTH, and whether or not there's enough value there for them to want it at a price north of 321. My initial reaction is they will, because that's the reason why we bought this in the first place. We bought it in the first place because we think the math is there for a sponsor to pay upwards of $4 and still make out well with synergies and with kind of growth that's going to happen over the next few years. But I admit to you, it is hard to put odds on this. So why don't we say there's a 65% chance that Cadent will match if the 335 bid comes real, okay? So if there's a 65% they would match, there's a 35% chance they would not match. And this goes through at 335. So it's 35% of 85%. Let's do the math there. That's 0.35 times 0.85 equals 29.75%. We'll just call it 30%. I guess I should be precise. 0.2975. So there's a 29.75% chance that the stock will trade 331. Call it. We'll call it 330. Call it 330 with a 5-cent discount for a 90-day close. If the definitive bid comes in at 335 and Cadent does not match. Okay. The final outcome is a bidding war, right? Cadent matches, which means by definition, well, I should say this. I'm almost certain that the new buyer did not use 335 as their topping bid. They had to bid whatever they needed to get to be a superior bid. Otherwise, they're just bidding against themselves. So it didn't incentivize them to bid $4 or $375 or whatever their actual topping bid is until they see whether Cadent matches. They don't gain anything from that. So I am virtually certain 335 is not their top. So we know they're going to bid again against Cadent if Cadent matches at 335. This is the $1 million question. What's their next bid? Their next bid is probably no less than 345. More likely something more like 350 maybe. If it's 345, you then have to ask yourself, how far is Cadent willing to go? They also, if they're willing to pay 335, they're probably willing to pay 345, given the math of the situation. So you basically have a 45% chance that the stock trades 330 or lower, 15% 316, 30% 330, and then let's call it 55% chance that the final price for the company is sold at a decent premium to where it's trading right now. And there's some expected value between the different prices it could go for. So like I said, they could bid 345, Cadent doesn't match. They could both go up to 375 before Cadent doesn't match. It could go to $4, quite frankly. The math's there. So why don't we say the expected value of all of that, the different price points, if Cadent matches, is 360, right? The range from 345 to $4. Not exactly in between. That would be 370, something like that, 345 to $4. I don't know. I don't think there's an equal probability through each price point. You're more likely to have it be, 350, 360, 370 than you are to have it be $4. So let's say it's a 55% chance that this trades 360 with maybe like a 365 or a 367 final bid. Because all we care about where it's going to trade, not what the closing price is going to be. So 55% chance, let's say 360. Okay. If we add all this up together, I actually have not done this analysis until right now with you guys. I did it implicitly. I've done it this morning, but I didn't actually spell it out. So 0.55 times 360 is $1.98. 0.15 times 316 is 47.4 cents. And then 30% times 330 is 99 cents. And then we add them all together. 99 plus 47.4 plus $1.98. And we get $3.44. And that is the expected value of where it should be trading today based on my probabilities, which is pretty funny because that's almost exactly where it's trading. And I did not do this exercise to back into this current price. So given that, I am trimming it a little bit. This was a very big position. Okay. I still think it's attractive. I still think that it is more likely than not that we end up with a price higher than 335 when this is all done. But I only put about a 55% chance of that happening. And then I put a 45% chance that this is going to trade down to either 330 or 316. And that is how I've analyzed ADTH this morning and last night. So again, at 340, it's below 344. And be clear, there's not a lot of precision into this analysis, right? There's a huge realm of possibilities of what the final price could be if Caden agrees to match. All right, let me pull back up the YouTube and see if I have any questions. No questions. Anybody? Andrew was going to call in. I don't know if Andrew's on here or not. I'm very, very interested to hear what Andrew's perspective is on this and whether he thinks he disagrees or has any pushback against my math. But until I hear from Andrew, let's move on to TripAdvisor. So TripAdvisor is a very interesting situation. Back in early February, Liberty TripAdvisor, which owns 20-something% of the economics of TripAdvisor and 50-something% of the vote in TripAdvisor, announced in a 13D that they have been approached by a party to acquire all the shares of TripAdvisor and Liberty TripAdvisor. And TripAdvisor put out a press release saying that they formed a special committee, and the special committee has sent a review and will evaluate all options that come to them. Sorry, I lost my train of thought. Since then, there has been two articles, one in Reuters and one in Bloomberg. Reuters said that they were approached by at least one party back in February, and in March, Bloomberg came out and said Apollo is in the mix. Okay. All that's fine and dandy, and I can get into some detail about why I think TripAdvisor is a fantastic LBO, and I'll do that in a minute. But TripAdvisor was supposed to report earnings tonight after the market closes and do a conference call tomorrow at 8:30 a.m. They always do it like that, okay? They announced last night that they are moving their earnings press release from tonight till tomorrow at 7:05 a.m. They put the exact time that they're going to be press releasing the earnings. They're keeping the conference call at the exact same time. This has my antennae up, okay? It isn't a scheduling conflict, because if there was a scheduling conflict, you would move the conference call. And they clearly don't need another 12 hours to prepare the press release for the earnings, right? There's not even a trading day in between what they moved it to. It's going from the afternoon today to very early in the pre-market tomorrow. Why are they doing this? So my initial reaction is that they are going to announce something material tomorrow. I'm actually pretty certain of it. I just don't know whether it's going to be good or it's going to be bad. What are the different realms of possibilities they can announce tomorrow? Well, they can announce an actual transaction, right? It's very odd that they said earnings are going to be at 7:05 a.m. Why did they do earnings at 7 a.m.? Okay. So I think there's a possibility at 7 a.m. we get a press release saying they're being acquired, and 7:05 a.m. we get earnings. Adam, that's a great point. That's a really, really important point. There was an article in Skift, I think I'm saying it right, that Skift is like this travel-related website that I am told has pretty good intelligence when it comes to travel-related stocks. And just 2 weeks ago, they published saying that Apollo is still in the running and there was, quote, ample interest from other parties. The reason why I really like TripAdvisor is the math truly works on an LBO here, okay? So let's talk about what TripAdvisor is today. It's not the same thing as you might have remembered it was years ago or using it as a customer. There are three businesses in TripAdvisor. Okay. One of them is pretty irrelevant. So I'm going to talk about that one first. They own something called The Fork, which is basically like an open table in Europe. And it doesn't really make any money, but it's growing at double digits. And it's very moody. I mean, that's a great business. So I'll tell you what I value that out. I'll give you the sum of the parts in a minute, but that's not material to the story. The two main assets of TripAdvisor are core TripAdvisor, which is the review website you're all familiar with, where you go and check to see what hotel you want to get in any given city. And then something called Viator, which is a to-do third-party bookings website that is part of a duopoly. And they're the largest in the US. And then there's another brand that's mostly in Europe. And the two of them basically account for most of the market share of what is online experiences and online bookings. Something like 80% of all tours and experiences are still booked offline. So there's a massive market share opportunity to go from offline to online. And this business has been exploding in growth over the last few years. Okay. But it's not profitable. It's kind of break even and it's growing rapidly. And this has always been a sum of the parts story, TripAdvisor, but there's never been a catalyst to capture that sum of the parts. Core TripAdvisor has had all sorts of problems over the years as Google has changed the way that the algorithms work and competing directly with their business with reviews on Google.com. And the OTAs have been moving advertising money away from TripAdvisor to Google and other platforms. The good news is that over the last year or so, that has stabilized, and core TripAdvisor now is not declining. Okay, and the EBITDA is stable, and it's a complete cash cow. Okay, and I believe that core TripAdvisor is a very valuable business. And for a private equity firm, I think it would be worth north of 7 or 8 times EBITDA. Okay. I think you could actually value it as much as 9 or 10 times EBITDA, despite the lack of top line growth, because it's so moody. You've already been hit by the Google changes. You now have this long-term cash cow that should be immune from further competition. When I book my hotels, I always go to TripAdvisor. Surely, if they have material information relating to a merger, acquisition, sale, then they must release it now, not allow a trading day when they schedule announcing the next day. Oh, I totally agree with that. I think they're really close. I think that they couldn't get it done by this afternoon. And the fact that they pushed earnings yesterday afternoon to the following morning means that they think they need the additional time to get it over the finish line. The other possibility is that the buyer is European and they wanted to schedule it in the morning so that it coincides with Europe time. Okay, that was one of my friends thought. But no, they're not sitting on a buyout. They don't have a definitive signed agreement right now. But my thought would be is that they're managing it to tomorrow morning. And that was the reason for pushing it. So I think core TripAdvisor is worth like 7 or 8 times EBITDA. Okay. If you value core TripAdvisor at, where do I have this here? At 7 times EBITDA, you get to a 2.45 billion valuation just with core EBITDA. Okay. I mean, with core TripAdvisor. If you value Fork at $400 million, which is a little bit more than 1 time sales, like 1.5 times sales, I added to that. And then finally, you have this final piece of the puzzle, Viator. Okay. The competitor of Viator, about a year ago, raised money at a $2 billion valuation. And it's largely believed that Viator is around the same size or maybe bigger. But there's some debate about that. But this valuation was over a year ago. Okay. I believe today that the least Viator would be worth would be $2 billion and as much as $4 billion. That would be 2 to 4 times sales of a business that's a duopoly that's growing rapidly. And you could get to very high EBITDA margins 5 or 7 years down the road. Hey, this is a private equity firm's dream. Okay, they buy both these companies. They grow Viator into a behemoth. It's already a $1 billion business. Margins go from 0 to 20, 25%, and you IPO it, and it gets a multiple of sales from 5 to 10 times. Okay. You then have the core TripAdvisor business that you can layer on 4, 5, 6 turns of debt, and you just run it for the cash. It's a moat. It's a moat business that, will never be supplanted. Okay, Google tried to do it. They took some flesh out of it, and that's it. It is what it is now. The holy grail is both of these businesses would be huge to strategic companies. Okay, but from antitrust perspective, it'd be very hard to merge them with any of the big travel websites or travel companies. But that doesn't mean it would be hard to do it a few years from now if it's a different administration. So a private equity firm can sit on these businesses and wait and potentially get a gigantic number from a strategic for both of them or one of them. What does my sum of the parts yield? So at the low end, which is 7 times EBITDA for core and $2 billion for Viator, I get to $36 a share. At the high end, I get to $50 a share. The stock's trading $26. Okay. The stock was 22 or so before they announced the process. Liberty TripAdvisor is in a real pickle. Okay. It's a broken vehicle, and they have all this debt coming due next March. And if they don't refinance that debt, and TripAdvisor is not higher than where it's trading at now, Liberty TripAdvisor might be a 0. So there's a reason and impetus for why it's timely for them to do something with TripAdvisor. Now, a lot of guys think that they're not going to finish the process successfully, and TripAdvisor is ultimately going to buy Liberty TripAdvisor out in a stock deal. If that happens, that's also bullish for TripAdvisor because it amounts to a levered buyback. Because Liberty TripAdvisor's market cap is very small. It's like $150 million or something. But it represents over 20% of the shares outstanding. So Liberty TripAdvisor would issue stock for that $150 million, and they would assume the debt and retire the debt of the preferred. There's a preferred outstanding that gets upside depending on what TripAdvisor trades. And you would ultimately have a levered buyback. And I believe strongly in these two businesses that they will continue to create value over time. At some point, they will spin out Viator. There's really no reason to do it yet. And that would be the way they would create value here. You would lever up core TripAdvisor as a public LBO, or you would sell core TripAdvisor to a private equity firm after you lever up. After you spin out Viator. But there's no reason to do that. A private equity firm will do all of this, and they'll make great returns off of it. BTIG had a note a couple months ago that said a private equity firm could pay anywhere between $35 and $45 a share to generate 20+% IRRs based on pretty modest assumptions. So I don't know what's going to happen tomorrow. I definitely expect something material. It's hard pressed for me to see how it's bad. I don't think they're going to kill the process tomorrow. I don't think they're going to blow up earnings tomorrow, though that's always a risk. The business is pretty stable and pretty kind of well tracked by traffic trends and things like that. And there's no reason to believe that there's going to be some sort of black swan earnings event. And that's the reason why they moved it to the same day as the conference call. As my friend said, they've blown up earnings many times, and they didn't move the earnings press release from the afternoon to the morning. So, yeah, let's see what happens. And that's it. Let's talk about Cure real quick. They announced earnings this morning, and they put some weird language in about how they are, tell me you're in a strategic process without being in a strategic process. They did not say strategic alternatives. They did not use that phrase. They used, what was the exact language they used? Sorry. They said, we are actively engaged in a comprehensive review of Unicure's operations and options to reduce expenses and increase shareholder value. We believe deeply in the significant value of our assets, as well as the need to achieve a focused and sustainable level of investment in order to maximize this potential. We expect to complete this evaluation mid-2024. So I do not think that they think that cost cuts are going to be enough here. And I made that clear to them, and I think their message has been heard, and I think they get it. I also don't think it takes months to fire a few people. So I am cautiously optimistic that whatever this evaluation is will result in a major transaction, whether it's a sale or not, who knows, but some transformative deal that highlights the fact that it's trading at half cash. There's $9 in net cash right now, basically, depending on how generous you are with the current assets and how much you dig them for the current liabilities outside of debt. So we have a timeline now, right? Mid-2024 means by the end of July. So by the end of July, we should have potentially a strategic outcome, a sale of the company, something transformative, maybe a partnership. Who knows what it will be. We'll have FDA feedback from Huntington's, which the market expects is going to be terrible. So anything positive there is a positive delta. And we're going to get the Huntington's update, which again, the market is completely written off as a zero. Hence why it trades at 50 cents on the dollar. So the stock trades like crap. It's up today, of course, but I still think it's just incredibly asymmetric. It's a huge position of mine. It's my biggest position, and I'll completely reevaluate it come August if everything goes against me, and we'll see where it's trading then, and I'll take an honest look at it if everything goes against me. But I'm cautiously optimistic that I'm going to get out of that one, and it's going to work out okay. My throat hurts. Goddamn. Does long LTRPA make sense here? I will just say that I do own a lot of LTRPA without me pitching LTRPA. I am not staying away from LTRPA. I like LTRPA, but LTRPA is very illiquid and it's hard to buy. And if things go wrong, that will go wrong in a hurry because of the debt and because of the leverage. And TRIP's obviously much more liquid and much easier for you to get in and out if you're just going to play it for a day or something. I've liked this for a few weeks. This is not a new position for me. I just haven't disclosed it yet. So yes, the majority of my position is in LTRPA. Any good theories on why the head of Viator left? I think he left for another job, and it was a pretty good job. So he was there for many years, and I don't like to see that happen during a process, but I don't think it means that Viator, the wheels are coming off. He wasn't fired because he left for another job. So you would say, why would he leave this amazing business if, he saw the path to riches? I do not have a good answer there, except that, again, he left for another job. And he obviously saw the other opportunity as interesting and maybe just a change of pace. But no, you don't like to see that during a process, obviously. That they're, he's not running the whole company, but he is running Viator. Anything else, guys? All right. I will come back and do another YouTube after we get news on ADTH. How are you thinking about sizing with all these merger up situations? Sean, that is such a good question. I have never been more invested in my life than I am right now. I have all sorts of leverage on. It's completely what's the word I'm looking for? Irresponsible. And I actually put on for the first time in years S&P 500 put spreads a few weeks ago that I've lost a huge amount of money on. Well, that's not true. I put on 100 basis points of put spreads, and I probably lost 50 basis points on them. But I hate hedges. But I'm so exposed that I thought it was the prudent thing to do. So how am I looking at my sizing? The problem with the way I invest is that I look at each individual name and I try to see what the downside is in that name and then I want to size it based on how much I'm willing to lose in that name. And then when I construct the portfolio, I'm pretty reckless. And if the market goes down 10% and it takes all of these down 10%, all of a sudden I've lost 30% of my portfolio because I really have that kind of leverage on. So the way I try to do it is I try to maximize my use of options, call spreads, etc., mostly call spreads, so that if things really go to shit, the most I lose is the call spreads. TH is a good example. TH is a huge position, but I was able to put on gigantic call spreads there. So I have all this exposure, and I will lose a lot of money if that fails, but it's fixed for the most part. JWN is the same thing. I have, a 10% common position on there, but I have huge upside in options. I put on a gigantic option position there. That's hard to put on now, but it allowed me to make it really big. With Unicure, it's just all common, and that is going to be a big driver of my P&L this year. Bridge Bio, BBIO, about half of that is call spreads. Roivant, about half of that is call spreads and short puts. Magnachip is almost all common. Amplify is almost all call spreads. RCM is all common. AGR is all common. EHAB is a very small common position with call spreads. But ultimately, in a down market, I'm gonna get hurt bad, and that's what always happens, with these special sits. I do think this is one of the richest opportunities I've ever seen in my career in special situations. I love these majority minority buyouts. In fact, I put on a new position in WOW, WOW, which I'll talk about in the future. I don't really know enough about it yet to really discuss it, but that just got a 480 bid by the 40% shareholder with a partner, and that's a levered beast. It's a cable company that I think is super interesting. That just happened last week, the bid. So there's time there. I just reported earnings today. So I have no shortage of opportunities. I am trying to limit new names now, though, because I have too many stocks and I have too much exposure. So it really has to be attractive for me to put on a new name. And TripAdvisor and LTRPA fits that goal, that mold to me. I don't know what's going to happen tomorrow. I thought we were a little bit early for there to be a deal, and it surely could be bad news. Okay. I just have a hard time seeing what that would be, especially in light of that article that came out 2 weeks ago. Maybe she could ask, but what is your cure common average? Curious how much you're down. It's funny. It's a good question, but it also is pretty irrelevant. So my average price is probably 650, but that's because I made it huge on the way down. Adding. I owned Cure since 20. Okay. So at 650, I would be break even, 630, something like that. The only reason why I say it doesn't matter that much what my average price is I try to mark everything to market. And if I did not find Cure interesting at 485, I would sell the position. I definitely wouldn't be adding to it. So I don't anchor on what my cost basis is on anything. It's ADTH is a perfect example. If I thought ADTH was overvalued here, I think it's overvalued here. But I don't. But it wouldn't matter that I paid $320 for it, right? Because that's not relevant to the situation. It's would I buy it here and how would I size it here? And I try not to use taxes too much in my equation. Any options plays you like with Trip? I actually don't. I looked at a lot of different things. I was short Trip puts going into today, and I covered them all this morning because the last thing you want to do is be short vol into tomorrow, right? I think this thing's going to move pretty big tomorrow. good or bad. And I don't want to be short puts. I looked at buying call spreads this morning, and I just didn't see anything that I loved. So, you know, it all looked too expensive to me. I feel better at my 720, but of course, it's irrational to take any solace from a maniac being in a similar position. Yeah. I mean, look, if Unicure is going to work, it's because management and the board are honest actors. And, in my conversations with them, I got the feeling that they were. But, this situation doesn't require a team of geniuses in a room figuring out how to make this work, right? You have a box, and in that box, you have $9 in cash and 4 clinical stage assets and, world-class manufacturing. If you can't open that box and come up with $10 and a CVR, which is 100% upside from here, then you're not doing your job correctly. And, I'm optimistic that they'll do that. All right. We good? I'm very happy about ADTH. I really want to give Andrew a lot of credit there. He did all the heavy lifting on it, and I can't overestimate how rare it is for a go shop to work. I mean, it could be as low as 5% of a time where they put a go shop provision in and it receives a superior bid. All the forces are set up against it working. There's not a lot of time, and the incoming bidder is in a disadvantage to the legacy bidder, legacy buyer. And for this to have worked, and I consider this now a success, even if the bidder does not follow through at 335. I mean, I guess that's not a success, but you now have all the time in the world. You could sell it at 340 if you want to, and made a good return. So, yeah, you just have to size it appropriately. I'll probably have, I don't know for sure. I had a 30% position going into today, and I'll probably have a 20% position coming out of today. Maybe I'll take it to 15% at some point in the next few days, but I'm comfortable with that given where we are right now, and the downside. I still think based on the math that we get a bidding war there and that it does go for north of 340 where it's trading right now. Probability of good versus bad for Trip. I think it's probably like a 90% chance that the news is good tomorrow. I simply believe that based on all the articles that have come out and the underlying math and attractiveness of this being a good LBO, and that LTRPA is a forced seller given the dynamics of the debt and the preferred coming due in March. For it to be bad, something really would have had to go wrong. My only way I could see it being bad is that they market tested Trip, and the bids were all well below what they think it's worth, so they killed the process. But I don't think that they would have went public with the process in February if they didn't get initial bids that were in line with what they wanted for the company. It all comes down to one guy, right? Maffei, whatever the hell, however you pronounce his name, Greg Maffei at Liberty. I'm not a Liberty guy. I never owned a Liberty stock in my life. I think Liberty is a cult. It's similar to almost, Berkshire. And so I know the history with Liberty, and I know the goods and the bads with, Maffei and Malone. But it seems very unlikely they would have put out a 13D in a formal process if they didn't expect it to get somewhere. They could have done it behind the scenes. I will say, if you want to read something really interesting, you should read the TripAdvisor write-up from Value Investors Club in December. It's available for anybody. There's also an LTRPA write-up from February on VIC, which I think is also now not behind a paywall. And they both really go into detail about why I think it's likely to be sold and the real immense value you get at TripAdvisor if someone paid $30 for it. My guess is it gets sold for somewhere between $30 and $35. Not necessarily tomorrow. Okay. But that's what I think is going to be the ultimate outcome. But I mean, look, it definitely could be bad news tomorrow. Okay. So I just think something's going to happen tomorrow. I think there's a chance we get an article today ahead of it tomorrow, quite frankly. But I guess we'll see. The day's already half over. All right. Thank you guys for tuning in. Do you think ADTH getting only one new bid makes management's 2020 growth projections more suspect? I thought they would have gotten more than one new bid. And I definitely think that 2024 and 2025 numbers might be too high. Yes, Jason. I do. But I think you still can make the math work here. You're just not going to get a $5 or $4.50, price. All right. Take care, guys. Over and out.